Close. Oh, she died. Yeah. It's like I had two scriptures, but he might donate so I get two scriptures, but it's just like the season. Yeah, fruit. It's not that nobody sure. I gave them those two. Okay, we are broadcasting out there, and there is sound out there, folks. I just hadn't been talking slow this morning. Sarah and I'm trying to get some taxes wrapped up. Today is tax deadline. Anybody here have to file? Johnson, you work, you had to file, didn't you? You had to file, okay? You filed, get your refund back. Some lady called this morning, I jotted her name down, and I brought it up. When we filed it, we could see what status is. I brought her her name, and she was just getting a $108 refund. But to her, it might have been a lot. Might have been some pot or meth. But anyway, I looked up the status on it. Her return had been processed and accepted, but IRS was keeping her money because she owed an obligation, either child support or some other federal obligation, and they were keeping it to apply to it. So things like that happen too. But we've had two different people trying to claim a child when there's divorce. We've had all kinds of situations. But we survived. Okay, we are planning on a test Thursday because today is April the 17th. Thursday is April the 19th. And if we can have that test Thursday, we've only got at the most 2 weeks to cram in some more material. We got to cover at least 9 chapters. Maybe we won't get to cover 3 after this test, but I told you can have a page of notes. And I advise you to jot down stuff on a little bit on cash flow, but a lot on investing in other companies and unrealized gains and so on. Back in chapter 15. Chapter 16, was cash flow. I think some of you are getting a handle on it. We need to cover direct, so we'll let direct go. And then we're going to wrap up the chapter on ratios today. So that brings us up to some homework. And I told you it would be 50 multiple choice. And I don't have the test made yet, or I'd read you some of the questions. But what we're going to do, we'll cover chapter 18, which is the introduction to managerial accounting. And we'll cover 19, job order. Now, we will not have time to cover chapter 20. That's okay. You'll get that managerial accounting. You actually get chapter 18, 19, 20 in managerial accounting and in cost accounting. So some of you are enrolled for managerial accounting. So we'll just try to cover 2 chapters after we have this test. And there'll be easy chapters on managerial accounting. All right. Ratios. Now, I told you could have that page of ratios, correct? And of course, I'll be here somewhere around 8:30 if you want to start early on those 50 multiple choice. Now, remember, on a multiple choice question, if it's journal entries, I can give you part credit. If it's a balance sheet, I can give you maybe 15 points out of 20. Well, on a multiple choice, I can give you nothing if it's wrong. It's either right or wrong, right? So I hate to give a multiple choice test, but just near the end of the semester, and it makes it easier to grade. And some of you may do better on multiple choice, but you will still have problems. You'll still have to know that cash flow statement. You'll still have to know ratios. So ratios is what we want to deal with today. And I am running behind this morning trying to take care of these tax things. Reason I'm trying to take care of tax things, I've got 3 on there. I've got the e-files. Today is the deadline. Does anybody know why today is the deadline? Why was Monday not the deadline? Usually it's Monday. It's the 15th, falls on Saturday or Sunday. Taxes due on Monday. But for some reason they're due today. Okay, I have worked this year, January, and I've worked February, and I've worked March, and I've worked over half of April. Now, that's what it takes. Rest of April, it takes 4 months for me to pay my taxes. I work for the government for the first 4 months. So May the 1st is tax freedom day for me. What I mean by that, a third of my income goes to state taxes and Social Security and IRS. So, but you'll find that out later too. Trump's new tax plan, I hope it helps. It won't help me on the standard deduction. That's going to work out probably in IRS's favor. I just hope his tax rates help me next year. Okay. But I don't grumble about having to pay taxes. I'll mention it. I'm blessed to have the income to pay the taxes on. Okay. Even Cole's going to have to pay taxes someday. Right, Cole?
Oh, yeah.
All right. I want to bring up a problem. We're going to practice some problems today and so on. Now, what was that one big problem that I wanted you to do for today? All right, what problem is that one, Jonathan? The one I wanted you to have done today?
4A.
4A. Now, Monique, I'm going to bet that you have that one done, don't you? Jonathan, I'm going to bet, and I'm gambling now, that you have that one done.
Yeah.
And Cole the same. All right. Come in, Carson. What number is that problem, guys? The big problem with all the ratios, what number is it?
4A.
All right, the current ratio, all right, what did you get, Cole, for the current ratio? 4A?
For the numerator, I got 2,464,000. Denominator was 880,000, and the calculated value was 2.8.
2.8. All right, now. Well, none of them bring it up this morning. Okay, I'm plugged in and I'm turned on. I'll go back and I didn't get in here and have it ready like I usually do. Okay. It's on the right thing. I'm plugged in. It's lit up. I should be getting something. Should be. They're all on. This one, it's always for sure. Maybe not come on. Doesn't matter on or not, it's not. No, it's coming up there. It's HDMI. Must be the equipment, obviously. Now, I don't know if folks out there can hear me or not this morning. Somebody text me, and let me know if you can hear me, because we're not getting any visual. Too late to call AV. Try hitting that again. There's only one way to plug it up. Well, none of these buttons up here are helping. Shucks. All right. I guess I could go over and see if it works in another classroom, so hold on a second. I'll see if it works in another room real quick. Hang on a minute until I see if it boots up over there. I don't know if it boot up over here or not. We'll see. Yeah, just have a seat. We'll see. Well, it's working back there. Okay, I'm broadcasting again. We had to change rooms. So this one up here is on. I don't know what's not coming into it, but it is the back screen's in it. So I'll go get the other students. One went off. It's coming back. Okay, that one's done. All right. All right, we are on problem 4A. In this chapter, you're going to have to calculate a lot of ratios. Problem 4A was the best practice. All right. And Cole has already given us answer to the first one. He said your current assets, which is the numerator, over your current liabilities, which is the denominator. You gave him 2.8. Now, countrywide, industry-wide, anything over 2 is usually considered okay. When you get under 2, you're in trouble. Who use these ratios? Loan officers, banks, finance companies, and so on. They don't use these ratios when you go get a home mortgage, because you're an individual. You don't have a balance sheet and income statement. But they will use these ratios when you go get a business loan. But you should have a balance sheet or an income statement. Your new business, you should have a projected pro forma income statement and balance sheet. Okay, so this is where we are. And Jonathan, what was your second?
Here was 1,536,000. The denominator was 180,000, and the value was 2.2.
All right, on that one, let's look at problem. Let's look at that problem on page 873. You had to retain earnings statement, income statement. Now, what year were you doing ratios for? Y2? Jonathan, you were doing Y2, weren't you? All right. I want all of you to add up the current assets. That gives me 1,936,000. Pick your current assets there on page 873. Add up the asset that gives me 1,936,000. You don't have a calculator, use your cell phone and just add by hand, add by head, head and hand. Everybody got it yet? Hey, do you have it yet? Okay, Jonathan, it's your problem. What is it?
Cash, market securities, and receivables.
All right, your cash, your multiple securities, and your accounts receivable are your quick assets. Now, some books put in prepaid expenses. This one does not. Take out prepaid expenses, take out inventories, add up all the other current assets to get your quick ratio. That's a 2-2. Usually, if it's better than 1, it's okay. So this company is pretty solvent. They're definitely not in danger of bankruptcy. They can pay their current debt. Monique, what was your next ratio?
2,800,000 greater. 142,100 values 20.
All right. She gave you numbers there that were not up here, but they don't have to be. Your numerator, you did give me the numerator, 2,850,000. All right. This is the average of your beginning and ending accounts receivable. 585 and 500,000 divided by 2. And then you divide that into your numerator and you got 20. Your accounts receivables turn over 20 times. Now divide that into 365. Divide 20 into 365. What do you get it? You getting anywhere close to 18? 18 what? It rounds off 18.3. That's the easiest way. Divide that turnover into 365. Now here, they took the average accounts receivable. all right? And they took the average daily sales divided by 365. And then they divided the average daily sales into the average accounts receivable and got 18.3. That's the long way around. All right, you're collecting every 18.3 days. What if your terms are 210 net 30? Is that good? 210 net 30, is that pretty good? It is, isn't it? If you collect every 18 days, you're getting the money that people owe you. All right, the next one's already up there. Inventory turnover. You take your what? What is the 6 million? Anybody? COGS? What is that? Cost of what? Cost of goods sold. Divided by your average inventory gives you 15. So you're selling your inventory 15 times a year. That's better than every month. Now, if you divide 15 into 365, which is the easiest way, what do you get? Monique, you have this. What have you got? No, just answer the number 7, dear.
24.3.
Everybody divide 15 into 365. Did that give you close? Close? 24.3. You're only keeping your inventory 24 days. All right, but now, if it takes you 30 days to collect, you still got money tied up in your inventory for 54 days. All right, the next one's ratio of fixed assets. All right, to what? Fixed assets to what? Ratio of fixed assets. Number 8, to long-term liabilities. Long-term liabilities. All right, your long-term, is this your fixed assets? It's 5,760,000, your fixed assets. Now you look at the balance sheet and they're right there. Your long-term liabilities on your balance sheet. So your assets is 1.8 times your long-term liabilities. Fixed assets are long-term liabilities are long-term. Again, it's your ability to pay back a debt. All right, now I want to give these out to everybody. Code number 9, work that one, please. Number 10, Jonathan. Number 11, Monique. Number 12, Carson. Number 13, Maya. Got your name right today. Number 14, Carson. I'm not Carson, but Clayton. And number 15, I won't attempt her name, but try number 15. Now, some of these folks already have these. They did their homework. Did not take up one problem on chapter 16 of the volume. Okay, guys, who had number 9? Ratio of liabilities to stockholders' equity. Cole, what you get?
The numerator, 4,080,000. Denominator, 4,844,000, and 0.8.
All right. Ratio of liabilities to stockholders' equity. Golly, that's only 0.8, isn't it? It's almost 50-50. I get no. Another million here almost. Okay. Loan officer may not like that ratio. No, they will like it because there's more ownership than debt. They will like it. Okay, what's the next one, Jonathan?
For the numerator, it's 1,152,000. The denominator is 132,000, and the value is 8.7.
All right, now this is times interest earned. This is EBIT. Jonathan gave me 1,152,000 because he added these two. This is earnings after interest. You had to add back interest, okay? Or taxes one, whichever. But this together is EBIT, earnings before interest and taxes divided by interest. So you made enough income to pay your interest 8.7 times. You got to be able to pay your interest. We paid it 8.7 times. All right, then Monique, how about the next one?
I got 12,850,000 for the numerator, 8,639,000 for the denominator, and 1.3 is the calculated value.
All right, and you got 1.3.
Yeah.
Now this was asset turnover. How do you use your assets in your business? This is average assets. What was 10,850,000? Was that sales? All right. All right, number 12. Carson, you work that one. All right, on number 12, return on total assets. What is the 600,000? Look at your income statement. What is the 600,000? If I get to the right problem. All right, look at 2000 Y2, page 873. Now look at your net income. What is it? What's your net income? 600,000. And what was your interest expense? 132. You're adding your net income and your interest expense together. And you're getting 732,000. And assets is your average assets, beginning and ending divided by 2. So it looks like your return on your assets is 8.5. That's better than 0.2 down at the bank, not even a fourth of a percent interest. Okay, Maya, did you get number 13? Let's see what number 13 is about. Return on stockholders' equity. All right. Now, Maya, we're going to all go to page. Somebody go to that page of ratios. Let's say you were taking the test today and you hadn't practiced any homework. You feel lost. You feel like you're going to fail the test because you haven't attended class and you haven't done any homework and you haven't read the chapter. But let's say you're all lost but this one page. Go back to page 848. Now, the ratio we want here for number 13 is return on stockholders' equity. Go down page 648 and find what it says to do. All right, and what does it say to do in that ratio? You can have this page on your test. What does it say to do? Divide what by what?
Net income by average total stockholders' equity.
Net income is 600,000. Go to the balance sheet and take your beginning and ending, divide it by 2. All right. So I'm saying, if you've never seen these before in your life, you should be able to follow those formulas and get some of them correct. Beginning and ending divided by 2, divided into 600,000. Return on equity is 12.8. A lot of investors want to know what this ROA, all right, ROA, some books call it, I got the bad right, ROA is return on assets, and ROE is return on equity. All right, Clayton, did you get number 14? It says return on common stockholders' equity. Now, if you're looking at the formula on back on the page we looked at, net income over all right, uncommon. Yeah, uncommon. Well, in this case, now look at these two here. Look at these two. What's the difference between these numbers here? This is return on common equity. This is all stock. So you find your common stock, which was 4,694,000. Leave out preferred. Divide by 2. Return on your common equity is 13.3. All right, how about EPS? Earnings per share is EPS. How about that one in the back? All right, how do you do EPS, Jonathan?
Your net income minus your preferred dividends over your shares of common stock outstanding.
Net income of 600,000. You paid out 10,000 in preferred dividends. Divided by what?
Your shares of common stock outstanding.
Which was 100,000. Now, was that easy to do? Let's look at the problem. All of you go to page 873. Go down to your stockholders' equity, and it says 500,000. So how do we find the shares outstanding? Jonathan got 100,000. Where do you get that 100,000 to get EPS? Anybody? Jonathan knows where he got it. Clayton, you know where it comes from? Yeah, 500,000. How do we get 100,000 shares? What par is it? $5, right? Divide 5 into 500,000, and you'll get 100,000. Okay. All right. So he got EPS of $5.90. This is also important to investors. This also helps drive the stock market up or down. Now, I hope you are paying attention how to work these, because at the end of the class, I want to get all of you a chance to hand in some ratios at the end of the period. Okay. All right, so the next one is dividends per share. We paid out $100,000. We have 100,000 shares. That's $1. But you only paid $5 a share, or you may have had to pay a premium, which is paid in capital. All right. And dividend yield, I suppose. You got $1 dividends per share. All right. Where does the denominator come from? 8260, Cole.
The market price per share of common stock.
Market price per share. You have to have that. That gives you dividend yield. You're paying 82 for that common. Par was only 5, but you're paying 82.64. So your dividend yield was only 1.2%. You got $1, you invested 82.60. That's like at the bank. If you got $1 interest on $82.60, you earn 1.2% interest. Same philosophy. All right, dividends per share of common stock. Wait a minute. That's all of them, isn't it? Yeah, that's all of them. All right, what do you think about them, Clayton? Think you'll be able to do them? There'll be some on the test in multiple choice. Again, the test is Thursday. I got texts from 3 people this morning. They were live streaming, so I text each one of them back. The test will be Thursday. So those 3 know, and that's 10 of you. I don't know how many's left, maybe 14 or 15. All right. Some of my other folks are not here, and they're not pre-registered either, like Haley and Lindsay's. I hope she's had that baby and doing well. There's Gregory and Anthony and Kendrick and a whole bunch of them just out today. Okay. Has everybody in here got pre-registered? Pre-registered? You didn't, Clayton? That's 5-point bonus, either on this test or exam. It don't make a difference. But deadline for pre-registration was last Friday. Okay. But if I put it on the exam, I'll give you the deadline right up until we have the exam, whichever. All right. Let's take a minute and do a couple other ratios. I want to go back and look at problem 17.1a. Read the first instruction. Prepare a comparative income statement with horizontal analysis. That's a cross. Now let's take sales. I want you to take sales, subtract, and get the difference. How much did sales increase from Y1 to Y2? 1 million what? 1 million what?
800,000.
Now what do I divide that by to get the percent of increase or decrease? What do I divide that by? The base year is 15 million, isn't it? Yeah. Y1. Do that and give me a percent. Divide the difference by the base year. All right, what do we get?
12%.
How much?
12%.
All right. Everybody do one of these real quick. All right, Jonathan, do cost of goods sold, do gross profit, do the selling expense, Monique. Carson, do administrative expense. Maya, total operating expense. Clayton, income from operations, and then other revenue. All you got to do is get the increase and decrease divided by the base year. All right, let's look at what your answer should have been. A couple of you, I don't think have calculators. It'd be nice to have one on a problem like this. But anyway, the difference in cost of goods sold would be $1,500,000. Jonathan, did you get 15%?
Yes.
And difference in gross profit would be 300,000 divided by 5 million. And did you get 6%? Cool. All right, looking at the rest of these, selling expense went up. Now remember, your sales went up 12%. Your expenses are going up 18%. Bottom line, what did net income do? Even with more sales, net income was a negative 6.8, 5.8. You'd have to see what's going wrong. Your cost of goods sold went up 15% when your sales went up 12. That's one thing wrong. Your selling expenses went up, two things wrong. So administrative expenses went up 22%, but sales only went up 12. So you got to analyze why. Now that's called a horizontal analysis. When you take the difference from one year to the next, divide by the base year to get a percent. Now look down at vertical analysis on problem 2. You'll be asked questions. You won't have to do one of these on the test, but you'll be asked questions. A vertical analysis letting sales be 100%, or letting total assets be 100%. Now, if sales here is 100%, that's 1,500,000. Everybody divide 1,500,000. This is year 2 into 10,000. Divide 1,500,000 into 10,000. What percent? 510,000. I'm sorry. 1,500,000 divided into 510,000. What percent is that? About 30 decimal 334 rounding. All right. So Jonathan, do gross profit. Code, do selling expense. Monique, do administrative. Carson, do total operating expense. Maya, income from operations. Clayton, other income. And in the back, income from income tax. We're now doing a vertical analysis. Very easy. What, John? Divide sales into gross profit.
For gross profit into sales.
No, sales into gross profit. Sales into any expense. Sales is always the denominator. Every one of sales is the denominator. All right, Jonathan, what'd you get anyway?
66%.
All right, now look at this one, folks. Sometimes you can subtract to get your answer. cost of goods sold is 34% from 166. Or Jonathan divided 990,000 by 1,000,005. Okay, but you're doing it just like an income statement. You can add and subtract where you need to on percents even. And Cole, which ones you have?
Whatever the next one was.
Uh,
Selling expense,
did you get
18%.
all right? Now let's just look at them and you see if you got yours correct. All right, here's 66 minus 18 minus 12. 12 and 18 gives you 30. 18 and 12 gives you 30. 30 from 66 gives you 36. Once you get started on them, you can get your percent. All right, if you get other revenue, it's 4%. And we know total revenue is 40%. 36 plus 4. And if taxes are 30, we know net income is 10. Well, net income went up from 7.5 to 10. That's a good thing. Good. All right, I just wanted you to have a little bit of insight on those comparative statements. Trying to find the problem I wanted to look at. All right, you got a calculator, guys? Calculator? No calculator. All right, here's the deal, folks. I want you to have practice. I want you to turn to problem 4B. Now, you at home, if you try this, you've got to email these to me right away. All right, now I've got 20 after 10. Class is over at what time? 15 till, right? All right, I want you to work as many on page 877, problem 17 4B. 17 4B. All right, I want you to work on your own. You've got your book. You've got that table of ratios. Now, there are how many ratios? 18. Ever how many ratios you can do between now and 15 to 9 is a half a point bonus on your test. All right, so you're going to have to try as hard as you can, as fast as you can. You get all 18 ratios done, times a half a point apiece, that'd be how much of a bonus on your test? 9 points. So this is one way to get you to practice. So you've got 25 minutes. Go to it. Well, you people out there viewing today, you know you have a test coming up Thursday, 50 multiple choice. Be here at 8:30, 9 o'clock, no later than 9:30.